Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on the dollar, gold, and the miners. Let's start with the dollar. So, got a channel here to be watching on the daily time frame. We did have the bearish break after that head and shoulders pattern setup. We saw a lower low hit. We hit those lower lows on an oversold RSI, and if you look back in history, the last time the RSI just dipped below 30, oftentimes we see a bounce, and that's over the past couple of years. Time and times again, you see the RSI dip just below 30, and we see a bounce. So at the low of that candlestick on the bullish reversal hammer day, the RSI was down just below 30. We saw a bullish reversal hammer, we confirmed it, and we saw a really strong bounce in the days that followed. We did see a bit of weakness with these dojis 3 days in a row with upper wicks of profit taking. We continued to see higher highs, but those upper wicks clearly showed profit taking, so it looked like we were going to see a pullback from there. But the bulls held strong and they established a base of support. Look at the low of these 4 days here: 137, 42, 41, 38. So we built a base of support there. It's definitely going to be a key support to be watching if we do see consolidation heading back down to that area. But as of right now, we are watching the continuation move. And we saw a lot of action over the past couple of days, a lot of fundamental news with the bombing of Syria and reactions in oil. So the dollar saw a bullish reaction and saw some big time follow through and continuation. And zooming out on things, the question now is, are we going to see continuation of the lower high and lower low pattern that has begun forming in 2017 here? This downtrend resistance line we're going to be watching as we approach it. In order to break the lower high pattern, the bulls have to break 102.25, a clear break of that double top, to break that lower high. If we reject from this downtrend resistance line, we're going to be looking to potentially pull back and bounce off this support line. So we have a clear couple rejections from this downtrend resistance, bouncing off this support 3 times, and that is a very clear channel to be watching for the next few weeks, as we are likely to stay within them, at least for the following week coming up. So the RSI on the daily time frame certainly still has potential room to the upside, as we are not even above 60 at this point. Not too overbought. We did consolidate and cool off those 3 days with those upper wicks. So the dollar bulls are seeing some strength. And we look at gold, and gold on the weekly time frame, I've been watching this downtrend resistance line for a very long time, and we have now rejected just below it last week, and we rejected clearly from it this week. The weekly time frame has formed 2 bearish reversal inverted hammers in a row, and if we see a red week this coming week, we will confirm it and be looking for further downside. So checking out what that looks like on the daily time frame, we had that very bullish reaction to the bombing of Syria. That sounds terrible to say, but that's the way gold reacted. Bullish reaction in gold, big move to the upside, and a break of key resistance, but the bulls could not hold that gain. We had a big upper wick of profit taking. We have a close down near the low, big time bearish reversal inverted hammer. So the range of the past 2 days, we have a big dip back on Wednesday with a low of 1243.62, and the new high is up at 1270.55. So that's the range that I'm watching in the short term. If we see a bear break of 1243.62, we look to 1239.53, and a break of 1249.53 would be the key level that breaking would put the bears back in control of the daily time frame for the short-term future. So the bears have some momentum even after that bull break, and in my opinion, we're going to have to get over this weekly downtrend resistance line in order for the bulls to see any kind of confidence moving forward in the short term. So we've got the bears currently have a bit of momentum, but it's not an all-out turnaround just yet. Again, in order to be confident that we're going to see some further weakness on gold, it's going to require a break of that daily support. And that, for me, those 2 levels, one last time, 1243.62, 1239.53. So where does that leave us with the miners? Miners are still weak. GDX and the senior miners are very, very clearly much stronger than the junior miners. And let's just compare these daily time frames really quickly. So we had a higher low and a higher high here before consolidating, and now we have a clear higher high. So the high previously was 23.56, and today we got up to 24.02. So a much clearer higher high. And we look at GDXJ and look at how weak we are comparatively. 38.57 was the high of the move previously, and we got a dollar short of that level. Nowhere near seeing the kind of follow through that GDX did. So both names saw bearish profit taking today after a gap up open, rejecting from the upper Bollinger Band on GDX, rejecting from nothing, but rejecting from that higher open and seeing that gap fill on the junior miners. So both names seeing that weakness with gold with that big upper wick. But what stands out to me is the inability of the bulls to put together momentum. And again, GDX has a lot more bull momentum than GDXJ, but even then, it's not entirely significant. We do have clear higher lows and higher highs. If I were to be playing a bull miner, I would absolutely be playing the senior miners at this point. I'm looking at resistance of 24.02, and I'm looking at support of 23.02, that little consolidation, the low of Wednesday before heading higher. Upper Bollinger Band resistance, we need to see these Bollinger Bands begin ascending and creating room to the upside. The weekly time frame, not really anything in the immediate future. We've got the 50-week resistance up in the 24s. We've got the middle Bollinger Band support down in the 22s. And we're pretty much floating right in the middle of those ranges. So the bulls trying to see follow through to the upside, continue the daily higher low and higher high pattern. For GDXJ, it's a lot different analysis. We are trying to break the lower high pattern, and we did with the high of today, but with the close, a weak close. So the 100-week move, or the 100-day moving average support held many tests. That's down at 35.60. That's a must-hold level going forward. Lose that 100-day moving average, it's a very clear bear break. In terms of resistance, 37.54. Then I'm looking at 38.22 and 38.57. We still have plenty of resistances from mid-March, whereas GDX does not. Weekly time frame for GDXJ, 50-week moving average resistance, 4 weeks of rejection, 4 weeks of support, 2 weeks of rejection. Bulls have to get over 38.34 and prove to me that they have strength to the upside, getting over that clear 50-week resistance in order to be looking at strength going forward. After bouncing off the middle Bollinger Band support of 35.52, we can be watching this weekly channel close above the 50-week, and we can be looking bullish for the next couple of weeks, and a close below the middle Bollinger Band, and we can be looking bearish for the next couple of weeks. So a lot of people that I know, a lot of traders, have shifted to playing GLD because the miners have been so range-bound. But GDX did break that range the past couple of days, hitting higher highs. But in terms of the junior miners, I would absolutely be looking to play something that is not as range-bound. And there's really a lot of choppy action here, not a ton of clear direction in the short term. So one thing that is for sure, with gold hitting the highest price that we have seen, let's see the last time gold was up at 1270s. That was back in November. So gold hit the highest price in November, and we look at these miners, and we're nowhere near hitting the high of even February. So that just shows you how much weaker they are compared to gold itself. And even the market's almost near its all-time highs. We're not too far off those all-time highs. So market strong, gold strong, miners still not seeing that follow through. So that's what we've got heading into next week. And I appreciate you watching, and we'll continue to check in. See you soon.